Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of September 15th, 2025. Let's get started. SEAF signals for this week. We got technology, consumer discretionary, and healthcare. Pretty much, if we're looking at this is overall relatively offensively aligned here with technology and consumer discretionary coming in the top two. Healthcare is a little bit more on a defensive nature. Honestly, that's relatively consistent with what we've been seeing with our indicators kind of across the board outside of the SEAF model in terms of seeing both strength as the S&P 500 continues to make new highs, as well as, things like gold popping off. So kind of that bimodal viewpoint of the market here is, as a little bit of hesitancy as the market continues to climb higher with some hedging here on the other end. So that at a high level makes sense, but that's not really what the SEAF model does. The SEAF model just tells you where the money is flowing. What you can see here is what we don't have any super high ranking scores at the moment. 10 being the highest with technology with its strategic quarter and trading week. We'll kind of highlight a little bit what's going on in more of the rainbow chart later. Overall, consumer discretionary being up in the top just by being good across the board, and healthcare coming in with a strong trading week and tactical month. Seeing a little bit of weakness here in financials as that came off the board from last week, and energy still kind of sitting here in the toward the bottom. Heading into our heat map. Again, showing strength in the week. Technology, 0.44% on the trading week. What does that mean? That means we have overall strength. That's a significant number for technology in this trading week, but didn't sustain that over the tactical month, but we do still have the strategic quarter, which had some accumulation in it. Healthcare showing a little bit of strength over the time, a little bit of accumulation in the tactical month. Overall, we were up 1.6% on the week last week in terms of net asset flows increase. 4 or 5 days were positive, and we had a 1% day on Wednesday of last week. So really kind of starting to see some money flow in a little bit stronger, a bit not, rapid rushes in or out in any particular sector. Financials coming out at a negative 0.36, close to significant. And then here, the other thing that I really like to point out is this chart right here. This is kind of our overall total sector spider, total AUM number. If you add up all the AUM data for the 11 sector spiders coming into one number. That's what we have here. And we are really starting to pull away here from this 21-day moving average. And what have we had? Since we've gone, we had that brief little dip below the 21-day moving average, but since then, the market has been up 9.3, almost 4% since then. This has been a relatively good indicator. As long as we have stayed above this 21-day moving average, the S&P 500 has effectively climbed higher. We've had a couple of little tests of this 21-day moving average with brief interludes here, as you can see, but overall, this thing has kept us on the right side of the market. So we'll continue to track this here as we've seen flows approaching all-time highs, nearing this $330 billion mark. So as of right now, things showing positive, and like I said, we're mostly offensive line here with technology and consumer discretionary being the top two. Heading into our rainbows. This is kind of what I was talking about. So, we've had that really strong run up with technology starting in the April lows up through really the beginning of August. Highly favored, sitting up in the high favor for most of that time. We've then played as money has kind of been flowing in and out. This is that kind of trepidation that I've been talking about with the market, as we've been seeing lighter flows and managers really trying to figure out where to be. Money flowed heavily out of tech and then came back into tech, and then flowed out of tech, and then came back into tech. Now, we would like to see this kind of get back into that upward favored if this is going to be a sustained rally for technology, as we've really kind of been in a sideways pattern since August. So this is our top SEAF signal for this week. Again, we have a little bit of outflow on the tactical month, but strength in the strategic quarter and the trading week. So we'll see if that could flow over and get up into this upper favored, but seeing a little bit of nice positive relative outperformance for technology as we dipped into neutral and came back out. Consumer discretionary, sitting in, spending a little less whippy than technology has been, which makes sense. Technology tends to be the tip of the spear. Sitting up now in this nice favored. We have a little bit of a nice relative performance move since we've moved out of neutral into favored. Consumer discretionary, a good place to be, though a bit. Notice we are in that little bit of a sideways pattern. I would like to see us break this relative performance high that we established, our local high that we established in May, to really kind of jump up into that. But again, we would need to see a little bit of upper favored to really kind of traject this relative outperformance. Again, it's not guaranteed and we're not projecting, but we are going to be testing this resistance level here again that we have not broken since May. Healthcare. Healthcare is, we had a little bit of run up here in February. We attempted to kind of get up there in late July, and we're sitting up into favor now again. Healthcare has been kind of a dog, really going back to the last year or more, spending a lot of time in this avoid territory. We are now up into favored, and we will see. We're a little bit buried. We have a little bit of a positive uptrend since late July. That coincides with this move into favored, avoid, and then back into favored. Again, seeing some nice sustained flows, tactical month of 1, trading week of 2, and we are really kind of building out of a hole after we sat in this deep avoid. So we can start to shut off that strategic quarter and really start to see this thing move up into upper favored as it did in February and March. We do get little sustained bursts of nice, strong relative outperformance. So again, the SEAF model does not project cash flows. We have a way, our algorithm tracks how that money is flowing in 3 different time periods. And as of right now, money is moving into healthcare a bit, not super aggressively, 0.08 on the trading week, but we do have some accumulation that tactical month that is driving us into favored. And we do have a slight uptrend in relative outperformance as we looks like we bottomed on that relative outperformance versus SPY in sometime in early August. Energy. Energy is currently our worst ranked sector. Really kind of sitting down in these lows, relative performance, testing new ones constantly. We've had these little brief interludes where we try to get up into neutral or even up into favored. Nothing has been sustained here. Energy continues to be a deep avoid. Financials. Kind of wanted to mark financials. Financials came up into favor and then came back right down into neutral. We've been seeing this a lot lately in this. I wanted to kind of holistically approach our rainbow charts. We've been seeing this a lot lately in a lot of our rainbow charts. Managers are looking, as there's a little bit of trepidation at this top of this market, managers are looking to try to find what's going to be the next run, what's going to be the next sector that has these nice sustained upper flows, and we just really haven't been seeing them. It's been kind of testing it around, going back to our heat map, kind of seeing a little bit of that Picasso painting, nothing that's really sticking up at the top or that's dark green across that we normally see when this thing is really bumping. Managers are throwing, little darts, hey, we're going to try financials. Financials didn't take off. All right, we're out. Throwing in a technology. The cool thing and the thing I really love about the SEAF model and what we've been doing lately is we've been picking off little bits of relative outperformance over the last couple of weeks. We've been moving in and out of different sectors because the money's been moving around, and it's been allowing us to pick up little bursts of relative outperformance. I believe the third quarter so far has been our best quarter this year for SEAF. And it's been doing that by kind of sniping these disparate parts of the market as money has quickly rushed in and then quickly rushed out. And we've been doing a good job of timing that up lately. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.